Hi, Steve from the Franchising Centre again, and today I'm going to talk to you about raising finance to buy your Access4Lofts franchise. Now, as you probably know, an Access4Lofts franchise has a cost of £29,950 plus VAT. You will get that VAT refunded, but you do need to pay it initially, so you're looking at a total investment in round figures of £36,000. Very few of the people who come to see us to buy an Access4Lofts franchise have £36,000 sat to one side, so they'll ask us about funding options, and that's what I'm going to talk to you about today. Most commonly, people will consider a bank loan, and bank loans are still a good way. Very many businesses start with a bank loan, and the major high street banks of HSBC, NatWest and Lloyds all have franchise departments who are very well aware of the franchising model. The good news about buying a franchise is that, of course, there's track record. So if you were to start a business that wasn't backed by a franchise, you would be putting figures in front of the bank which, let's be honest, are a guess. Whereas when you've got a franchise, and we have 80 other franchise territories in operation, we can draw data from all of those and put your plan together based on some realistic, solid projections. We still put them together fairly conservatively, and that's a deliberate policy so that the bank then see that every single franchisee in Access4Lofts outperforms their business plan, and that's a nice way to do it. So the banks are a good solid option. There is a downside though, that over the last few years bank loans have got increasingly more expensive. So go back 4 or 5 years and interest rates of 5 or 6% were relatively common. Now we hear figures of 7, 8, 9, even 10 or 12%. And also the affordability test. So that's the test the bank puts you through to make sure you can afford the loan. They want to make sure that they've got some headroom in that, and by that I mean that they don't want you running a very tight ship where you can only just afford the loan. So they take a very conservative view these days, and even though these banks are still keen to lend and they're still a good option for you, you may find that they will look to lend slightly less than you might ideally want. So the other option that I want to talk to you about is, I think, the best one at the moment, and that's the government startup loan scheme. So the government startup loan scheme was formed originally to help people start new businesses and ultimately employ staff. So the government's thinking there, and it's quite nice that they were thinking this through, is to encourage people to start businesses, make it easier for them. They will then employ people, and then the overall unemployment figures start to drop. So it's a smart idea, and it actually works very well. So we very commonly will put people through the government startup loan scheme when they look to buy an Access4Lofts franchise, because it's actually a very good fit. The loan scheme will advance you a maximum of £25,000 over 5 years. Now that does mean that, of course, we talked about £36,000 total investment, so you do need a bit more than the 25, but you would with a bank as well. Just so that you know, the bank will never lend you everything you need to start a business. They always like to see what they call skin in the game. They want you as a franchisee to put some investment of your own money in there, and they'll very commonly look for you to put about 30% in there. So you're broadly at the same sort of figures. The bank lends you 25, you put in another 11 or 12. That all makes sense. But coming back to the government startup loan scheme, they're operating at a 6% interest rate. Now, as I said, a few years ago, 6% wasn't particularly special, but these days it certainly is. And what we find now is that when people go to apply for a bank loan, even with a really good credit history and a very solid model such as Access4Lofts, they're still looking at figures of something like 8, 9, 10% interest rate. So the government startup loan's a good option. There's a couple of other reasons why it's a good option, and one of them is it's unsecured. That means they're not taking a charge over your property or any other assets, and that therefore means that the loan is backed by the government rather than backed by you personally. It is still a personal loan, so there are some constraints when you apply for it, and one of those is that you need to put together a detailed business plan, and that's something we can help you with. We work with funding partners who have access to all of the data for the entire Access4Lofts network. So from that they can draw out figures that show what your likely sales will be, what your likely profitability will be, and from that they can see that it's a very comfortably affordable loan. Just to give you some numbers, if you look to borrow £25,000 over 5 years at a 6% interest rate, your repayments will be £483 a month. Now, that is still a significant sum to repay, of course, but when you consider that typically a franchisee with Access4Lofts will start to hit sales of between £10,000 and £15,000 during their per month during their first year, then a £500 a month payment out of a sales of, let's say, £12,000, £14,000 is a relatively small proportion of that, and that's what makes it all affordable. The other thing that's worth knowing with the startup loan scheme is there's no penalty for early repayment. And a great many of the Access4Lofts franchisees have repaid it early because after a couple of years they've got over that initial fear of starting and paying for the franchise and everything else, and then thinking, well, actually I can see that there's solid money coming in every month. I don't need to have this loan anymore. So they'll pay it back. And here's where there's another benefit of the startup loan scheme. You can repay it early with no penalties. A lot of bank loans do have a penalty for early repayment. A lot of bank loans also have an arrangement fee. And again, there isn't one with the government startup loan scheme. So the final benefit of that scheme is it's relatively quick. Typically a bank loan, the conventional high street banks, will take something like 2 to 3 months to process and pay out a loan of that size. The government startup loan scheme is nearly always 3 or 4 weeks, so it's significantly quicker. Again, we work with a partner who will deal with all of that for you. So they will ask you the right questions, they will fill in the right forms, they'll create your business plan and they'll submit it to the startup loan scheme administrators. Now, as soon as that comes through, we can then start putting things in place for you to join the franchise. But an important point to finish on is that we don't want anybody to come into this business uncertain if they're going to be able to get finance. So we would always start you off on that process before you've actually committed to join. And what we mean by that is that you would speak to our partners, you would talk personally, they don't share the information with us, but you would talk personally about things like your own income, expenses, household costs and so on. They will put that together with the standard Access4Lofts business plan where we've got a lot of data to draw the figures from. And they can then work with you to say, is this affordable for you? Are you comfortable with it? And crucially, are you likely to be accepted? Assuming all of that's okay, then that's the point where he will come back to us and say, yes, we have a green light on this candidate. And at that point, we will then talk to you about timing of your training and when you're going to start and everything else. You would pay a deposit to reserve your territory, but in the event, for whatever reason, that you weren't able to get funding, then that deposit is refundable, less any costs that have been incurred up to that point. But generally, nothing's incurred in the first few weeks anyway. So it's a solid way to do it. We want to make sure that you've actually got that concern dealt with. You're not going into the business worried about funding it. We want to have all of that out of the way before you actually commit to joining the franchise. And then we know that everything works as a business. We know the performance will generally exceed the figures we put in the plan, and you'll comfortably be able to afford your loan repayments.